individual. If you form your business, at least you can prove your intention is to run the business. But however, I forgot one thing. Eventually, that was in my mind, but be careful there, okay? Because I can change this. Here. I believe there's one text section for this. Anybody can find me for that? Inventory. This is a very important section. Okay. Inventory. This is ordinary assets. Let me see. Ordinary assets. Okay, this is on page 287. Oh, I'm sorry, I give it wrong. 1231. This is 1231. This one. Let me change it. Anybody can help me to find out what is the using business? Let's see. Let me change a little bit. Okay. So 1231. This is inventory, and 1231. There are two. Okay, there are two categories. Let me see. 1231. I'm sorry. Okay, let me correct myself. 1231 still is the using business. So I'm right so far. So can anybody find out the section code for inventory for me? If you cannot find out, we just add this one. Inventory, if you form a business, and the worst case is the IRS may argue whatever you purchase come in, it is not the assets at all. It is your inventory. So if the property qualifies as inventory, it doesn't matter how long you hold this property, whatever you sold, doesn't matter the gain or loss, they all become ordinary income or ordinary loss. So eventually, if you are business, the worst case is the property may become your inventory. So say for example, you are in the stamp collection business. You become the dealer. You become the sport car dealer. So whatsoever you purchase in become your inventory. So doesn't matter is gain or loss you incur, all become the ordinary. So it become very neutral. Become very, very neutral. You did not get a benefit as a lower tax rate. So again, this is very difficult to go around the hobby issue. So I just want to raise the hobby issue here. So even you argue this is your capital assets, the reason why you want to argue this is your capital assets because you want to lower your capital gain tax rate. However, if IRS argue this is your collection, this is a hobby, then you cannot even incur the hobby loss. The hobby loss can only offset the same year hobby gain, maximum. That really means the best you can do is to break down your total hobby gain as zero, but nothing more than zero. That really means there is no hobby loss. Okay. Any questions so far? We'll go to one by one right now. Yes, go ahead.
If investment property was you change to rental.
Rental investment qualify as number 2, usually.
Yeah, but if you buy and sell the property, it's inventory, right? Classified as inventory, but you cannot sell it. Then you transfer it to rental.
Okay, if you are in the dealer, if you don't do this as a dealer, usually IRS will qualify as number 2. I know his questions. His questions if you are the investor. Say for example, real estate. Right now, the property value is so low. You just go to do the auction, or you pay some very low price to acquire the real estate from the bank, bank-owned property. And of course, say for example, you purchase is $100,000, and in 6 months period, very short period, you flip, say 150. If you do this very, very frequently, you may be qualified as dealer. So whatever the money you earn is not capital, it's not even short-term capital, is ordinary. You become ordinary. So we'll talk about that. Okay. So this is a very, very blurred, fine line between the investor and dealer. Once this person be traded as a dealer, and the assets become very neutral, it becomes inventory. That really means whatever the gain or loss all becomes ordinary. Ordinary income, ordinary loss. It's very neutral. That really means you cannot enjoy the lower tax rate.
How about if